So, Tom, there's a problem with businesses, and it revolves around taking profit. Everybody is in business for profit, right? Everybody is
That's
in this. I mean, certainly it is a byproduct of business that we all desire when we went into business.
right.
Even if we're trying to change the world, we need to make a
Mhm.
profit. That's why we're in business. But there's a problem. How, what does that look like, Tom?
There's a problem that we like to call, it's called eradicating entrepreneurial poverty. And the way we suggest going about that is by doing a method called profit first. What is profit first? It's a different way to look at the old accounting formula. The old accounting formula always says sales minus expenses equals profit. Well, all these companies, these small businesses, there's 28 million small businesses in the United States. 22 million of them are break even. They're all using this old formula.
So what
Whereas
you're
the problem
saying,
is,
what you're saying to recap that traditional formula says we sell some stuff, we spend some stuff, and what's left over is profit.
is ours, yeah.
But
So,
22 million
but
small businesses, it's not working for them.
no, so 75% of the businesses in the United States, it's this formula is not working. So, if it's not working, wouldn't you look for something else to make it work?
Absolutely.
So what happens is the old way of looking at this is that accounting just takes into account the numbers. It doesn't take into account human behavior around those numbers. So with Parkinson, I'll give you a little example. So with Parkinson's law, our demand upon resources tend to expand to match the supply of that resource. So what that means is that you've got all this money coming in from sales and you see that big number and your eyes just get big. They just go, wow, look at all that I can spend. Instead of thinking about it, well, I still have to make a profit, but I have this cute toy over here that I want to get for the company, or I have this new software I want to get for the company,
Right.
and I have all this money, so let's spend it now. You know, it's like the old thing with the tube of toothpaste. You get a brand new tube of toothpaste, it's all nice and full. Where do you grab? You grab right in the middle and you squeeze it out. Put it on your toothbrush, brush your teeth at night. As you get near the end of that toothpaste, there's less and less, and you're doing as much as you can to make sure that you get all of that toothpaste that you paid for so you can brush your teeth. You're not just going to get to the end of the thing and just throw the tube of toothpaste away. You know, it's no different than paper towels. You have that nice big roll of paper towels to start, and you just grab a couple of them. But as you get less and less, you take in that sheet of paper and you rip it in half so that you don't have to go out and buy new ones. What this kind of does is this gives you a new formula that takes into account human behavior. So instead of sales minus expenses equal profit, you say sales less what my profit percentage needs to be is the amount I can spend on expenses. So it's redoing the way the formula looks. You still have the same three categories. It's just how you look at that. So
So instead of, and I think this is like one of the really cool things with profit first, instead of profit being a leftover, what's left over after we run our business, it becomes the priority. And then we run our business based on that priority. So, I mean,
right,
I'm going to raise my hand because that's what I want to do. You know,
yeah,
I'm in business. We're in business to make a profit. So why wouldn't we put that first if it's important? So I think it makes total sense. So we're just taking the formula and we're flipping it upside down. But it's
right.
pretty radical because people don't do things that way, and that means
No, no,
change.
no, they don't. And it comes down to everybody knows the accounting formulas. You should read your profit and loss. You should read your balance sheet. You should conduct financial analysis. But what do most small business owners do?
They go online.
They log onto their bank account
Do I
and they
have
say
money?
how much cash do I have in the bank? So what this does is it takes the Parkinson's law into effect and says, okay, we know what human behavior does is that they tend to expand what their supply is. Let's redo it so that they don't see that supply. So You take your profit first, it's out of your supply. So then you look at your expenses and say, okay, now I have this supply instead of this sales number that came in. I take my profit out, and then this is the number I spend on expenses. So what that does is it makes you think about, I've only got this now to spend. Is that new shiny software, is that new shiny piece of equipment that I was looking at, is that really necessary right now, and does my cash flow allow it? Because you still want to make a profit. I mean, it's bottom line why you went into business. I mean, you didn't go into business so you could lose money so that 2 years down the line you can file bankruptcy and start all over again. You don't want to do that. So that is the fix. Always take your profits first. Always.
Right.
Expand the money that's coming to you instead of you getting the leftovers. You take what's supposed to come to you first. And that's what's the problem with most of the businesses. That's why 22 million of them are break even. They're filling. They think they need this new software when really they can get by without it, or they need this new subscription service where they can get by without it. So you're basically taking your profit so that you can be around in the next year to make sure that you keep operating correctly.
Well, I think maybe a good example for this, I think about, I have a routine, and I try to work out first thing in the morning.
Yep.
And if anybody has ever had that, you have something like exercise, right? So what happens is if I get up, the first thing I do is put on my shoes, put on my clothes, go to the gym. I'm good. It's good. The rest of the day goes on. But if I get up, maybe I get up a few minutes late. Maybe I have some emails to answer. Maybe I have a few early morning appointments that I need to get ready for. The second I take something and I shift it away from being in that priority spot, it starts the cascade of it falling down in priority. So first you do the first meetings and you're like, this is not a good time. Mid-morning's a bad time. I'm productive this time of morning. I'll go in the afternoon. Well, afternoon comes, then you have a few unexpected phone calls, and those take priority. And all of a sudden, you look down, and it's 6 or 7 o'clock in the evening. You haven't exercised.
You haven't seen your family.
You haven't seen your family, and so you don't exercise.
Right.
And this is exactly what's happening with profits.
Correct.
This is exactly what people are doing. If you take it last, you might as well plan to not take it at all. Because whatever's least important, you'll never get to. Whether it's how you prioritize your day, or how you prioritize your work, or how you prioritize your family, or what, just doesn't matter. Whatever you put in the bottom slot, just consider that not important. You're not going to get to it.
Right.
And so it's genius, even though people need to understand their accountant might look at them cross-eyed when they say, I want to do something different. They're going to be like, I don't know what you're talking about. That's not what we do.
Right. Yeah. So he said it's always take that profit first because you don't want it to be last, because it's always whatever at the bottom of your priority list always is going to be at your bottom of your priority list, and it's going to just be ignored. Like you see on that example on the exercise. Before you know it, the next day, oh geez, I found out I could get a couple emails or stuff done before I got really busy. And I'll work out the next day, and I'll work out the next day, and before you know it, it's 3 weeks later, and you haven't worked out.
Yeah, before you know it, it's the next New Year's resolution, and you're like, I guess I should start exercising now. No, you got to treat your profit, and again, I'm going to use another silly analogy. You got to treat your profit like the emergency oxygen on the airplane. Put your oxygen on yourself first. Take the profit first, and then you can help the rest of your business. Then you can make sure that
that's actually
gets
the perfect
done.
Analogy. What do they always tell you in the plane?
Yeah.
Always put your mask on first before you help anybody else.
Yeah, you're
That's
not going to be a
basically what
help
your
to
profit
anyone
is.
if you pass out, and your business can't serve its clients. You can't pay your employees. You can't do anything if you run out of money. If you're running a business in the negative, you're not running a profitable business, you're not going to be around for long. So you're not going to be doing any good. So those are kind of the cold, hard realities. So we have a nature to do bank balance or accounting. Explain to me how, once we start to think profit first, how does bank balance accounting then all of a sudden, like we don't have to change our habits, how does that start to help us once we do profit first?
Well, like I said, you don't have to change your habits. You can still do the bank balance accounting. But what you do is you take your bank balance, when the sales come in, you do an allocation. So you say, I allocate so much to profit, allocate so much to operating expenses, so much to payroll, so much to taxes, so much to owner's compensation. you put it in different accounts so that you know what they actually are for. So if you want to spend something, if you're looking for something new in your operating expenses, you can still do your bank balance accounting. You go, what's in my operating expense account? You don't go, what's in my total bank accounts? You say, what's in my operating expense account?
Right.
So you come up with these these formulas or percentages to say, based on our past history or based on what our budget is, we allocate X percentage to profit, X percentage to cover our payroll so that our employees are happy, so that they know they get paid. How much to owner's comp, how much to cover taxes, because, the IRS and the states, they all want their share. So you want to make sure that you have that money set aside so that you don't have a big surprise at the end of the year. You've already got it set aside. You do your tax return. If you owe money, you've already got it in this tax account. It's all ready to go. And then your operating expense. So again, you're going to look at, what do I need to operate my business? What's my operating expenses? Does it fit within cash flow purposes, and does it actually fit within our budget for the year too?
So you're touching on a principle here, and I want you to unpack this so people that hear this understand what we're talking about. So the first portion of Profit First is priority. When you prioritize something, it gets done. The second portion that you're kind of getting into, you're talking about these different accounts. That's another way that we work with our behavior instead of trying to change our behavior.
Right.
And I think this really aligns up with what you're talking about with Parkinson's law. Explain to me what we're doing with these accounts and this allocation system. Like, why do we do that? Number one, why are we talking about allocating our money, and what benefit does that have? Just kind of walk us through that.
Right. So what it does is that it's like we talked about. You're taking your profit first. You're allocating what your profit is, goes into that account. Then you know what your payroll is going to be. So if you look at historical, you could say my payroll is historically 20% of my sales. You take that 20%, you put that side into the payroll account. It covers the employee wages. It covers all the payroll taxes you have to pay. It's sitting in that account. And then the same thing, you got your owner's comp, because not only do you have profit, you actually work in the company most of the time. So you should get paid for what you do working in the company. So you allocate that percentage too. And then your operating expenses and taxes. And what it does is it's that mentality again. So when you want to buy that new thing for Parkinson's law, okay, I've only got $1,000 in my operating expense account to cover for the next month. Is that going to be enough? So it's going to get you thinking, can I cut expenses? What can I cut out for the month? Or two, it gets you the other thing saying, how can we bring more sales in? So it's that psychology again. You're going to fill up to that, whatever your supply is. And you may say, I need a $20,000 piece of equipment that I need to pay for by the end of the year.
Yeah.
So you're going to say, how am I going to get enough money in that operating expense account to be able to do that?
Right.
Well, you either have to cut other expenses. So you actually will have to analyze your expenses every month to say, is this necessary? Is this necessary? One of the big things that we talk about when we first do Profit First is to say, cancel all your automatic withdrawals out of your bank account.
Yeah.
Because then what they do is they call you to say, hey, your charge didn't work this month. And then you can look at it and say, do I really need this?
Right.
So that's what this does, is it focuses you on to say, what am I really spending my money on? Should I be spending my money on that? Because if I'm going over what my operating expense allocation is, something's wrong. You got to figure out, you're not going to stay in business long, because you're just going to keep spending money based on that supply demand. I mean, you're just going to look at how much money is sitting there. But if you allocate it into different accounts, and you only look at those certain accounts every day, don't look at your profit account or the other accounts, because you just allocate that money and you put it away. It's just it's kind of the old out of sight, out of mind. So the only account you really should be looking at is, if you're worried about your operating expenses, look at my operating expense account.
And so this could be, maybe like a word of wisdom with this. You could defeat your own program, right? So you move all the money around. Your operating expenses are running kind of low this month. I mean, you could go borrow from the tax account. You could go borrow from your profit account. But in this system, you want to avoid that, right?
Right. In the system, you want to just, when it gets into that account, you don't want to borrow from it. So if your operating expense runs low, you have to figure out why. You can't just go and borrow from the other accounts. Now, granted, I shouldn't say this, but there probably are going to be super extraordinary items that come up that you have to do some things with, but this will really make you think about, do I really need that? I mean, what is causing this event that I need to even think about going into my other accounts?
Right.
But those are allocated for specific purposes. You shouldn't be borrowing between the accounts.
So, pretty cool system here, and one of the benefits to this, not only will you be making profit, but you start to run a leaner company. You start to run, and you're not wasting resources. And I'd have to imagine. I mean, I think about myself. It really chaps me to think that we're wasting resources.
Right.
I mean, maybe they don't all come to me, but whether it is something the company needs, or something someone that works for me needs, or something that my family needs, to think that, when you look at something, you're like, man, we just flushed that money away. And that could have really have been impactful here, 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 or here.
Right.
This system helps you not do that. And that's a pretty valuable thing, making more with the resources you have, being more frugal. And this is like, the account system, it's kind of like if anybody has ever heard of like the envelope system for personal finances.
Correct.
You get a paycheck and you figure out how much. You get 2 paychecks a month. You have an envelope for your mortgage or your rent money. You have an envelope for, your
groceries,
food and
you
bills,
have an envelope
money.
for your utilities,
You might have a little savings envelope, and then what's left over after these envelopes that you have to have is your extras, your spending cash, right? But you put that stuff away and you put it in those places so you're not seeing on payday. You cash a check and you're like, man, I got a couple grand. We can probably go on a vacation. But it helps you keep into perspective what's really there, what's really on the plate, what the reality is. And you start to operate accordingly. This is that same type of thing, except for a business, right?
Yeah. So, I mean, you want to set up the main account for where all your money comes in for sales. And then you just allocate it out to all the other accounts that you use. So, because we all need that main account, because you're going to have, you're going to have credit card sales. You're going to have people paying you by EFT. Paying for that. So you want all the funds to come into one account, but you don't want to spend anything out of that account. All you want to do is transfer, like you say, to the envelopes for that business.
A lot of questions here, and there's lots of nuances to this process. We're not going to be able to give full implementation. I think it's important to say what we're trying to do today is to introduce a concept. Introduce the concept of profit first, why it's important, like you can make profit in your business. You can make your profit. I mean, actually, the cool thing with profit first, you can be profitable today. If you did nothing but set up a profit account and allocate 1%, you could be profitable today and never have an unprofitable business
today,
again.
Yeah. And that's actually what, like you say, you can't really implement it right away, but that's what you do is you start the change in the behavior. You allocate something. So even if at the end of the quarter you're doing a quarterly distribution and it's only $300, that's still $300 more than you did the quarter before. And then what you do is you just keep upping that a number so that you get to the actual profit percentage you want. Now, if you're starting a business from scratch, that's easy. You look at, okay, what does my industry say I should do for percentages? You do it, and from day one you should be profitable. But I know you can't just change those percentages overnight. You have to work into them.
Absolutely. You got to go slow. So let's talk a little bit about, so there's kind of 3 phases to this process. Tom, walk us through the 3 phases of implementation of what this looks like.
So the first phase is that you do a profit assessment on the company. So you review all the historical data for the company, what financially trends they're doing, and it's kind of in a way you could look at it in accounting terms is it's almost like a modified cash flow. You're looking at where they've spent their money. Was it spent on loans? Was it spent on operating expenses? Was it spent on payroll? And then based on the category of the type of business you're in, that's where you plan on how to get your business to those perfect, or those historical numbers that we have found that work the best for those type of companies. So
Okay.
you got to review that company's financial information, their trends, all of that information before you can even come up with a plan to say, okay, here's where you're at now, because you have to analyze it all. This is where you want to get to. Now, how do we get there?
Okay.
And then after that, you do the implementation. You set up the bank accounts and you start doing the allocations. You can go to pretty much any bank, spend an hour or two there getting 4 or 5 different accounts set up so that you can do all your allocations.
And when you do allocations, what does that look like? Are we doing it every day, once a month? How often do we do allocations?
You're going to get in the flow of what works best for you, but usually it's either twice a month or once every week.
Okay.
And then at that point you do your allocations, and then you set up your schedule of when you're going to pay your bills.
Okay.
So as an example, if that you pay payroll every 2 weeks, you have to for sure at least do that allocation every 2 weeks so that you can allocate money to the payroll account to make sure that your employees get paid.
Okay. And then what's the third phase? So we put it in, we start allocating money, then what?
Right. So that third phase is you're trying to maximize your profit. So you've got your allocations, you're trying to figure out your owner's pay, all of that, so that you can get as much going out. And it's a quarterly process. So you figure out your profit percentage, and as my example before, even if you just start with that 1%, and your profit number that you get out at the end of the quarter is $300, you take that $300 and you spend it on yourself. Granted, it may just be a dinner with you and your wife, but make sure to celebrate that profit. Or you may say that I need to pay down some extra debt. Well, pay some extra debt, but at least celebrate something, even if it's going out for just an ice cream cone or something with your wife. Make sure to celebrate that profit, because you want to have that goal at the end of every quarter that, hey, I got profit. I get to do something fun at the end of every quarter.
Yeah.
Because you have to do something fun, otherwise it's just going to get bad. I mean, you're just going to get in that doldrums, and you're going to get into that profits at the bottom. You're continually driving, and you're saying that, I've got all this money coming in, but at the end of the quarter, I never have any money. Where does it go? Mm-hmm. You do your allocations, take your profit first. This helps you analyze your operating expenses so you know where all that money's going. And so by the time you get to the end of the quarter, you get a nice little, hopefully once you get up to your max profit percentages, you got some nice numbers that you can take out, and you can do some fun things with it. And then at the end of the year, you've still got the money to cover the taxes. The owner's comp that you schedule for your percentages, that's what you should be living on. The profit is to do some fun stuff. Is at the end of every quarter. The owner's comp that you set up should be what you'd be living off of. You shouldn't be trying to live off the profit. The profit's for either doing something fun, either investing in a new company, going out, taking a trip with the family, whatever it may be.
Yeah.
That's what you want to do with it.
Don't put it back into the business, because then it's not profit.
Do not put it back in the business.
So that's super helpful. I mean, I love the description of that world after you implement this. Every quarter getting to enjoy the fruits of your labors, getting paid back for the risk you take in business, getting we all need milestones and goals, and it's been proven time and time again. We get about 90 days of focus, and we set up a quarterly system. Every 90 days we get rewarded for our continued focus, and a reason to go back and say, how can we do better? That $500 distribution was good. How do we make it 1,000? How do we continue to move this forward? And it's an exciting prospect to think about, and getting to a point where those distributions might mean a new car, or it might mean a down payment on a house, or it might mean a really cool vacation, or whatever that thing is, that for you that it always seems out of reach. This is how you get your business to do that for you, and we talk about this, like we said, we start our business.
This is just an overall scheme there are so many different nuances based on what type of business you're in, whether you have cost of goods sold, whether you're service industry, whatever it may be. And that's where, this is just an overview. You can read the book and try to implement yourself, but it's always best to try to find a professional to help you out.
Right. And I think that is a good way to wrap this up. Profit First book is awesome. Definitely worth a read. Everybody should read it because getting the understanding, wrapping your mind around these concepts really helps you to see what they can do for you. Reality is when it comes to implementation, you're busy with your business. We know this, right? And just like you have a bookkeeper doing your bookkeeping, just like you have different people who do things for you, you can get a Profit First professional who can come in and help you get this set up so that it works. Because the last thing you want to do is come in and misjudge it, and it can blow back up in your face. You really do need having that guidance is going to help ensure that it works. You can get to that point.
We'll take it back to that exercise analogy. If you don't find the right person to help you implement this correctly, and you say, I can do this myself, what's going to happen is you're going to start implementing it, and Joe's going to come in from the warehouse and say, hey, we got this problem, and you're going to get distracted. You're just going to, and all of a sudden, before you know it, this implementation just keeps getting pushed away. Whereas if you have somebody helping you do this, they're going to give you that plan to say, okay, step 1, do this. Step 2, do this. Step 3, do this. And they're going to make you accountable, because then the next time you meet with them, you better have that step done so that you can do the next step. Instead of, well, I can do it myself, and then we all know what happens on, that's why 75% of the businesses are at break even, because they think they can do it themselves.
And that is a topic for another conversation. So thanks a lot, Tom. This was super helpful. Check out the Profit First book. I'm sure you can get it anywhere books are sold.
Yep, you can get it on Amazon. Just Google it. You'll be able to find it somewhere.
And if someone wants to actually ask specific questions about their business, they can contact you. I'm sure there'll be a link in the description, in the email with this video. They can contact you and set up a consultation to learn a little bit more about what this would look like in their business and some actual step-by-step guides. This was, again, a very, very high-level overview.
Correct.
But yeah, I can't recommend putting your profit first enough. It's really time that has stopped being the last thing. You work hard on your business. You deserve it.
Yeah, it is eye-opening when you just think about just reevaluating that formula. And it's not going to be an overnight change. It's going to be a step-by-step process to get through it. And then but once you start implementing it, your business is going to run so much smoother.
So the moral of the story is call Tom. Get Profit First implemented. I'm going to say it because it's true.
That's the moral.
You don't have to say
call
it,
Tom,
but it's true.
Yeah.
Call Tom. Let him help you implement this. Don't put it off any longer. Right? I mean, you need to be doing Profit First in your business. Well, thanks a lot, Tom. This was super helpful today. And
all right. Thanks,
we'll do it again.
All right. Have a good week.